one of our questions is, what happens to the economy if they don't reach a deal today? Secretary Mnuchin said one last serious try, which is hopeful. But if they're still far apart, what happens to this recovery that we have seen?
So the recovery, really, the reason we had the stimulus provided by the Federal Reserve and by the fiscal agents back in March and April was really to build a bridge, if you will, over the coronavirus until it's far behind us and we can re-engage fully in economic activity. And we are not out of those woods yet. So we need a longer bridge. And along with what the Federal Reserve has done, we need the fiscal agents to offer support to the parts of the economy that have yet to recover, to the millions of Americans who are still sidelined and wondering how they're going to pay their bills. So whether it happens next week or next month is important to those American households, but also really important to shoring up the economy so that we can fully re-engage and get the coronavirus behind us.
What about jobs in particular? We've seen good momentum, and the ADP private sector jobs report was out today. It was strong, though claims remain elevated. And just in the last 24 hours, Disney announced it's laying off 28,000 parks workers. Dow said about 6% of its global workforce. We're expecting as much as 30,000 airline layoffs if they don't get more aid, which could come in the next 24 hours. So what's going to happen to the momentum on jobs? Where do you expect the unemployment rate to be at the end of the year?
Well, the unemployment rate, I guess, is an overused measure. I think it's important, but not everybody is queuing up, if you will, in the unemployment rate. Many people are just out of the labor force altogether. And so we have many more people who are sidelined that are being counted in an unemployment rate alone. And so what I really want to focus on is the fact that, yes, this momentum, this recovery of some of the job growth is a positive, but we are in a very big hole, a very big ditch, if you will. And just with these kinds of growth rates that we have in the labor market, it would take still, 2 to 3 years to fully get back into the economy we had prior to COVID. So I think we have to hold both things simultaneously. We have to be encouraged by the positive data coming out of the labor market and keep in mind those additional 40,000, 30,000 people being laid off permanently who were just on furlough up until now, and the countless other Americans who lost their jobs earlier and have yet to find employment.
Assuming there isn't a stimulus bill before the election and that political gridlock continues throughout the rest of this year, how quickly do you think the current positive momentum on the jobs front turns in the opposite direction? And is there anything on the monetary policy side that could meaningfully offset that, or are we already at pretty much full support?
Well, I see the support that we've provided in September when we came out and codified, if you will, the strategy document that we put out in August and said, okay, this is how it's affecting policy and our forward guidance. It seems clear now that households, businesses, market participants understand that we are providing accommodative policy until we're fully back to achieving our full employment and price stability goals. So I see that as a positive. What ultimately, though, determines the strength of the recovery is the COVID crisis, the health. If we can continue on the containment strategy and work towards a full-blown mitigation strategy, either a therapeutic or a vaccine, then that's what will determine the confidence of the American people, the confidence of businesses, and our ability to get past this. And right now, it's really fiscal agents in the Federal Reserve and state and local governments that are trying to just build this bridge while we get over the health crisis.
To that point, President Daly, do you factor in a vaccine that will be effective and widely used in your economic forecast when you look ahead to next year and when you determine where you think rates are going to be?
I always consult the health experts. I'm not an epidemiologist or a health expert. So what I've been doing since the beginning of the crisis, and certainly continue to do, is consult them. And when I consult them, they say, look for middle of 2021 as the time when we could get a full-blown mitigation strategy until they were in containment, wearing masks, social distancing, behaving in these ways that we have allowed the economy to come back. And I do factor that in. Those aspects in, but ultimately it's uncertain. And so what I say, and I think this is the hard part for everyone to take in, including me, is that the health determines the economy. As the health goes, so goes the economy. And so right now we've seen some positives as we've learned to deal with COVID. And when we get a mitigation strategy, a vaccine or a therapeutic, then we can put this fully behind us and completely re-engage in activity. And then, of course, we'll have to look back and dig ourselves out of the hole that this has cost us.
Shepard Smith here. Thanks for watching CNBC on YouTube.